Good morning, Paul Georgie from Allendale. It's April 25th, and the market's going to be volatile here this morning and the day after Easter, which is a holiday pretty much around the world as Easter Monday. A lot of traders off in other countries, so may slow down the volume here somewhat when looking for fund interest and buying and selling coming in here today. But we've got enough excitement here this morning, especially with weather causing strength in the grain markets. Corn market up 15 plus cents here on the overnight session. Wheat up 22 cents. Corn up because of the wet conditions, and wheat up because of the dry conditions, and especially in the soft red winter wheat area and in the northern part of the plains where wet conditions is keeping the spring wheat from being planted. So this weather problems that we're seeing, the enormous amounts of rain that we've seen over the weekend. We had heard as much as 5 inches of rain in Cincinnati, Indianapolis, 4+ inches of rain right in the heart of the Corn Belt, and going to take several days for that to dry out, and doesn't look like it will have the chance, as the weather forecasters are calling for rain just about every day here in Chicago for the next week. So rain is going to keep this corn from being planted. We've got the USDA planted progress numbers and crop conditions numbers coming out this afternoon at 3 o'clock. Certainly going to be less than what normal would be, and it definitely will get the trade concerned about getting this crop in the ground and getting this record yield or trend yield that we need. So the probabilities here, when you get to the USDA supply demand report here in the middle of May, are they going to lower yield numbers on corn? Very likely that they could, because of the potential late planting that we're looking at. We've also got other news. Managed money, the CFTC Commitment of Traders report on Friday afternoon showed that managed money increased their long positions in corn by about 17,000 contracts and decreased their long position by about 12,000 contracts in soybeans. So anticipation there that because of the late planting in corn, we're going to see more bean acres, but a complete opposite of what we've seen there on the USDA Prospective Plantings report there at the end of March. Europe and rain, also weather conditions around the world. Spain, Germany, and France did get a little bit of rain, but not really enough to meet their needs. They are in a dry condition there, and talking about the wheat crop there being set back and yields being reduced because of lack of moisture in that part of the world. We also had news out of China, the concern there of cancellations of soybean purchases because their crushers are just not making a profit. The margins there are negative for crushing soybeans right now, so they've slowed that process down. And the talk is, and some comments out of China here over the weekend, that their actual demand for the 10-11 marketing year here is going to be less than what was expected, down as much as 5% potentially, which would put that soybean imports around 54 million tons. And then in the next statement they say, well, we're going to increase our demand for 11-12 up to near 60 million metric tons. So moving the shells around here, basically, with the demand issues in China. There also is comment out of there that there may be releasing wheat out of the government storage in order to meet wheat demands and flour demands in China in order to control their inflation that continues to get out of hand. There has been no comment that they devalued the yuan here over the weekend, but the yuan was down sharply here this morning, down the limit in trading in China, and that caused some strength in the dollar. But since that time, we've seen some drifting lower in the dollar as well. Dollar down only about one tick here this morning. But the excitement in all commodities here is in the silver and the gold. Gold up about $7 right now, was up about 15. Silver came within a whisker of hitting $50 here today. 49.82 is the high in the nearby contract. So the silver market is definitely on fire, up about $3 an ounce here this morning. Over in the livestock trade, we've got markets called steady higher in the cattle, in line with some of the other markets in these outside market strengths here. Mainly, cattle on feed report came out on Friday, had about 105% on feed, placed at 103.3, which is a little less than what the trade was expecting, and marketing was strong at 104.5. So expecting that, all in all, it might have a little effect on spreads, where it could provide some support here for the June contract compared to the deferreds here on the opening. But the report was pretty much neutral, in line with what trade was expecting. The cold storage numbers that the hog producers were watching showed that we had about 3 million more pounds of pork in storage. That could weigh on the market from a fundamental perspective, but if the fund buying persists here throughout the commodity complex, we could see hog markets opening stronger there as well. So look for a volatile day, probably a lighter volume day, as a lot of the world is on holiday today. So we could see some extra volatility, and because of that. So stay in touch with Allendale's research, and we'll try to keep you informed the best we can. You can give us a call here at 800-262-7538. Be happy to answer any questions you might have. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.